This Bitcoin cycle has had a constant narrative of this time is different, and that we will not see a big blow off top due to institutions and smart money now being a major influence. But is this really the case, or can we still expect a truly parabolic move for BTC? So we'll get right into it here on the Fear and Greed Index chart we have here on BitcoinMagazinePro.com. Now, a lot of investors will look at this chart and think it's way too simplistic. It's not useful, it's not handy, it's just basically tracking sentiment and doesn't really give us any insights. There's much more valuable macroeconomic data, on-chain data, and while I can agree to some extent, I don't think we should write this off yet. I think just because institutions are now here, we shouldn't say that sentiment, human psychology, natural behavior of investors isn't applicable to these big smart money institutions. Even though, of course, we have seen diminishing volatility this cycle, we haven't seen the big exponential run-ups that many may have expected. I don't think this cycle has been underwhelming. We've gone from around $15,000 to over $120,000, which is a pretty monumental impact. And in doing so, we've had very little extended deep drawdown periods like we historically have. So of course, the market dynamics are changing. If we look at the ETFs, treasury companies, these are hundreds of thousands, millions of Bitcoin that are being accumulated, which of course, if we're assuming that these aren't necessarily going to be sold on the open market anytime soon, is just changing the supply and demand economics of the network. But to argue that there won't be a bubble, there won't be a big parabolic move, we're just going to have these step up and boring price actions, I don't think is the case at all. It's not just Bitcoin that is susceptible to these bubbles. If we look at this Wikipedia article, stock market bubbles have been occurring since the dawn of markets. Throughout all of history, not just in Bitcoin, throughout all markets, we've seen market bubbles occurring. And they happen because of emotional and cognitive biases. And if you think that we've already seen a Bitcoin market top this cycle, we've already had a big euphoric peak in price action, I don't think you understand how crazy things will get towards a market cycle peak. Last cycle, we were seeing people paying over $1 million for a picture of a rock. And this isn't a joke, this was a big thing. These NFTs, which were, I won't go too much into that, but people think that this time that won't happen. We're all going to be very rational this cycle because last cycle we learned all of our lessons. And especially now that big smart money institutional investors are here, we're not going to see this irrational behavior. The market's going to be considerably less volatile, considerably more mature. But this isn't the case. We can see there's been countless studies looking at the fact that bubbles aren't just a possibility, but here a necessity within markets. Stability, lack of volatility leads to irrationality and big parabolic moves. We can see this even within the Bitcoin markets themselves, looking at the open interest chart. We can see when Bitcoin is very stable with a lack of volatility, people start placing bets. When economies become very stable, very safe and secure, people start taking out excess debt and leverage and loans. And this isn't a bad thing. This is the traditional business cycle, the traditional boom and bust cyclical nature of not just investing markets, but the world, human nature, everything. If we look at the neural signature from a neuroscientific perspective of the human psychology behind this, we can see that these are completely natural. It's human nature to think in booms and busts and bubbles. This isn't something that we can say doesn't apply to smart money or institutional investors just because they have deeper wallets. In fact, there's plenty of evidence from the London School of Economics pointing towards the fact that sophisticated investors are more susceptible to boom bust cycles and jumping into trends too late. If we go down here, there was a great line in here. We can see that these investments drive prices up even faster than if they were only naive trend following the same market. Instead, the more sophisticated investors there are, the faster asset price bubbles form. This isn't something that is going to go away because institutional investors are here. In fact, if we look at this piece from a weekly analysis bit I did a couple weeks ago on BitcoinMagazinePro.com for site subscribers, what we actually identified is that when the ETF inflows or outflows turn negative, indicating a majority of these big institutional smart money investors, and I know not all of the ETF buyers are going to be big smart institutional investors, but a notable percentage of them will be, we can see when they start outflowing, selling BTC ETFs, this coincides with market bottoms. These are trend following investors, just like in every other market. If you think I'm being irrational, look towards the housing crisis in 2008, which just didn't even make sense looking back in hindsight. You think we can't be susceptible to make those mistakes again. But then you look at vaccine companies post-2020 COVID dumps that went astronomically high. And you look at any single boom and bust cycle, the dot-com bubble in 2000, almost primarily driven by big institutional investors. This is just bound to happen again. And people saying that we're not going to see a big parabolic move because we haven't seen the big retail influx, we haven't seen new FOMO participants coming into the market because maybe they've been burnt on altcoins or just are sick of crypto. And that may be the case, that may be true. But what we can do, this is the gold market cap. And we can see since January 2024, so just since the start of last year when the gold market cap was around $14 trillion, it has increased to today to over $24 trillion. That's over $10 trillion in just over a year and a half, just increasing the gold market cap. Now, Bitcoin is at around $2 trillion. If we would see Bitcoin increase only $2 trillion, then we'd be at $220,000 roughly based on where this is today. But if we take into account the money multiplier effect, we don't need $1 to flow into the market to actually result in a $1 increase. If I just remove all of those apart from the roughly long-term holders, those 6+ month holders, we can see that roughly 77% of Bitcoin is being held by long-term holders. So round that to around 20% of Bitcoin being available by new market participants, readily available to be bought up by new capital inflows. Then we can say around 20% of that would result in a 5x money multiplier. So $1 coming into the market would increase the market cap by, say, $5, or let's say somewhere between $4 and $5 if it's between 20 and 25%. So to see the Bitcoin market cap increase by $2 trillion, and assuming we'll go for the bearish assumption of a 4x money multiplier, we'd only need $500 million, I know, 500 billion, sorry, and I say only $500 billion to increase the market cap by $2 trillion, assuming a 4x money multiplier. But $500 billion is 5% of the gold increase we've seen in just over a year and a half. If 5% of this rotates into Bitcoin, we would see roughly a market cap increase of $2 trillion. And that sounds ridiculous. We're not going to see that rotation. We're not going to see a big parabolic move in Bitcoin. It's just not going to happen this cycle. Well, if I go onto TradingView here, I'll just move myself over here so it's slightly easier to see. I'm just going to zoom out and look at multiple moves we've already had in this cycle so far that would take us significantly higher before 2026, before the year end. So I'll add this onto the chart here. This is the big first Bitcoin move we had off the bottom back here in 2022, where we went pretty parabolic, I would say. We had this big exponential move, about 80% in 109 days. Now I've just copied that, posted a fractal over the chart from where we currently are today. And again, that would result in a Bitcoin price of pretty much bang on $200,000 before the end of the year. That's something we've already experienced this cycle. All we need to do is replicate something that has already happened. And it hasn't happened just once. I can add on the next move we had, which was back here, where again, if we were to assume we'd do something similar to that, again, before even mid-December, we'd see a Bitcoin price of $200,000. Or again, if we were to replicate what we saw when we first ran up here to over $70,000, we would see a Bitcoin price of over $200,000 before the end of October. These are moves that have already happened this cycle. Again, we look back to when Bitcoin ran up to above $100,000 for the first time. That resulted in a move to $220,000 before the end of the year. And again, just even recently, this move we had just a few months ago, as Bitcoin again ran up to a new all-time high, would result in a Bitcoin price of $180,000 before the end of the year. I can add all of these on. All of these moves have already happened this Bitcoin cycle. And to say this wouldn't be a parabolic move is just completely missing the point. This would definitely result in a huge parabolic move for Bitcoin, and we can see it's possible. It's already happened this cycle, and the money actually required to do so, the capital inflows from other markets, it seems an inevitability at this point, especially if you zoom back out over the previous Bitcoin market cycles and see again, we're looking at a market entirely influenced by supply and demand economics. We can see long-term holders like to sell Bitcoin as the market is rapidly increasing. If I just go back here and look at the long-term holder supply of Bitcoin, we can see anytime we have this stagnation in price action throughout this market cycle, the supply for long-term holders begins to increase. We only see these big sustained decreases where Bitcoin is being moved from long-term holder wallets to new market participants to short-term holders as price is rapidly increasing. We zoom in over this cycle, anytime we've had some choppy consolidation, boring sideways price action, long-term investors aren't selling. And when we see a market top, it's because long-term holders are transferring the Bitcoin, they're selling it at considerably higher prices than what they accumulate it for, which results in a big drawn out bear cycle. And this is just the natural cyclical nature of Bitcoin. And a lot of people will say, of course, you can say this has happened every cycle, but it didn't happen in the last cycle, the 2021 double top cycle. We had this big parabolic run up to 40K, and then we had this weird double top where all the metrics didn't work out. And if we were to do something like that, if we saw another double top or even a triple top this cycle, it'd be really underwhelming. But again, if I just grab the bars pattern tool on here, what I can do is just grab from the bottom we set after that to the all-time high of the previous cycle and overlay that to the previous price action. Again, I think people are massively underestimating how fast Bitcoin can ascend and how high it can ascend. This would be an ultimate parabolic move, just replicating what we did last cycle when everyone looking back in hindsight is incredibly underwhelmed. It would send Bitcoin to around $250,000 before the end of the year. And that is from a move everyone looks back and considers incredibly underwhelming. Bitcoin at $200,000 having a big parabolic move before the end of this year is a very reasonable thing to assume could be possible for the market, especially looking at how much Bitcoin is still held by long-term holders. We can see that this rally has only just begun, and it's actually paused after we've had just a minor drawdown period. So if this time is different, in my opinion, it's only going to result in a more exuberant rally, a more parabolic move than many are anticipating. Everyone's pointing towards this being a very boring, drawn out, potentially lengthening cycle, but we can see when the market starts getting overheated, when people really start rotating the capital in, even without retail participants, people are just underestimating what Bitcoin can do in such a short space of time. And a parabolic move like we see signifying the end of every Bitcoin cycle, to me, is probably the more probable outcome of how this bull market will end. Also, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we discussed today, as well as the many more that are all available on bitcoinmagazinepro.com, your number one source for Bitcoin analysis. So just to summarize, this Bitcoin cycle has had a constant narrative of this time is different, and that we will not see a big blow off top due to institutions and smart money now being a major influence. But what we can see by looking at peer-reviewed studies, historical examples, pretty much any data point you can see, is that just because you have deeper wallets doesn't mean you're immune to human nature. And the data suggests that you may even be more susceptible. We can see that when asset bubbles start to occur, people don't pull out, people don't start acting rationally. People see others making money and think that the bubble isn't going to stop, the music isn't going to stop, and you can just continue to pile in money because this time is different. And what we can see is, even though the market dynamics have changed by these institutional and big smart money players coming into the market, we've already experienced a number of very rapid rallies this cycle, which if we were to replicate any of them would result in a 200-ish thousand price Bitcoin before the end of the year. And best of all, we can look at the data that's actually backing this up. We can see by looking at the on-chain data, which is just mass psychology quantified. For the first time in history, we can see this in real time, tracking this sentiment, tracking this supply and demand economics, to actually try and gain an understanding of where we may be in the market cycle. And again, looking at the data, it shows that we have substantial upside potential remaining. I think a parabolic move for Bitcoin would be a great end to the year. And I'm not saying that it's an inevitability. Of course, I can't say with 100% certainty. Anyone that does work in certainties is just trying to sell you something, trying to inflate their own ego by saying that they're right and disregarding all the times that were wrong. We have to work in probabilities. This isn't a certainty. Nothing is a certainty. But looking at every single historical example of every single Bitcoin cycle pointing towards this, looking at institutional investors in other markets always doing the same thing. It's just patterns of investor human psychology. I'm not going to say it's a certainty, of course I can't, but I think it's a very high probability that we do see a big speculative bubble, a big blow off top in Bitcoin before probably a 50 to 70 plus percent drawdown market. But a $200,000+ Bitcoin in a very short space of time is very much within the realm of possibility. If you like this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more for a fraction of the standard industry price. And let me know if you think a big parabolic blow-off top for Bitcoin is possible this cycle. And if so, what price and when do you think that this may occur? Do you think 200K before the end of the year is a genuine possibility? As I said, let me know in the comments below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.